say make money, money, make money, money, money.
Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town.
Welcome back to another episode of Just the Tips. You got your three hosts. You got Brucey Boy, myself. You got Gordo, and you got Georgie, Georgie the Bear, I guess, today.
That's right.
I will bury the lead for now in terms of what company we're talking about, but just wanted to open up the floor and see if there was any news items that you guys thought were interesting.
Well,
heading into
I was going to say,
2025.
Bruce, normally you're drinking a beer during these recordings. What's
New
your
Year's
drink of choice
resolution?
tonight?
I
know. Are you dry January?
Dry January. I don't know. I was trying to make it like a wet January where I got like extra loose every day, but
Well, I said I'm gonna stop killing hookers, and I already broke that one. So shit. How many days in was last Thursday?
We're all
wait,
falling apart.
Are we still recording? I'll edit that out.
I actually will go grab a beer. I did forget one. But maybe
Go get a drink.
I'm gonna do it mid stride here. But maybe while I do, you guys can give a little background on what it is we do anyway. And
Wait, we're doing your job for you?
Yeah, you're doing my job for me. And then also, like, why don't we go around starting with Gordo and talk about one New Year's resolution.
I already told you the one that I failed.
Your resolution was not to kill any hookers. What was it?
I keep,
All right. I'll give. Well, George. Well, what's your New Year's resolution?
The same one I have every year. It's to make my wife happier.
She doesn't. She must listen to this on occasion. Just for the record, that you've missed it every single year. Right? It's gone down like every year.
That's why it keeps coming back every year, because I keep failing.
Just double down. You just keep doubling the bet. You will
This is gonna be the year. This is gonna be the year.
Get it all back.
My wife always asks me like what my New Year's resolution is. I always tell her like it's almost impossible to improve on perfection. I'm gonna try to keep it going.
And how does she respond to that?
She usually punches me in the dick.
Or the eye like this.
Yeah, exactly.
You
but
fell.
no, this year
Right,
this year I'm actually trying to do more sauna action. Like if you guys listen to like the Huberman or the Peter Adia podcast.
Wait, this is a New Year's resolution. You're trying to spend time in the sauna?
Yeah, it's like it reduces all-cause mortality by a meaningful percentage, by like 20%. If you like,
that feels like the sauna industry is like lobbying industries behind this somewhere. I don't buy this.
Towels with other men.
No, man, I'm trying to get in there more, man. That's my New Year's resolution. I'm trying to live long.
Now, are these co-ed saunas or are they male-only saunas?
It's all dudes. It's only dudes.
Only dudes.
You gotta weigh 250 pounds just
It's
to
like
just to walk
OnlyFans,
in.
but only dudes.
Yeah.
And do you wear a towel, or is it what's your sauna experience? Is it but bare it all?
Yeah, I wear a towel. I go in fully clothed actually.
But does everyone else? Is there the 80-year-old man who's balls are no longer basically connected to his body? And
Dude, I got into the sauna game very recently, and I got to tell you, like the dispersion of characters in there is pretty fucking wide. Like, there's some guys in there that are like too old to be in there. Some guys in there that are like fighting for their life the second they're in there. Like they're like giving themselves like positive affirmations and stuff. Like it's just like a wild environment. Like all bets are off. So I just try to like just
do you have conversations in there with any of these characters? Like, or is it all silence?
Sometimes they strike up a conversation. Like they'll start to like talk, and then like other people will get mad, and like I don't know, dude. It's like it's just like too dark and steamy and weird to like really like just try to like
How do we just turn this into the sauna version of Eyes Wide Shut with Bruce? Like let's move on from this stuff. Your New Year's resolution to be more in towels with men. Okay, great. Moving on.
I'm keeping it 100, man. I'm trying to live forever.
Okay, Drake.
And with that, you should go get your beer.
Go get you a beer.
I will, yeah.
Beer.
Yeah.
That'll help you.
He
That'll
definitely
help
does
extend
not
your
admit
life.
it. He's definitely sharing a lot of personal stuff.
No. Oh yeah. Why don't you? You said we were going to tell people about this podcast and what we do. So far it's just been
Do
you know.
your job.
But usually we cover one stock every week. We take a bull case, we present a bear case, and then at the end we give our real opinions. Everyone should note that we are just doing this for fun, and if you don't take this as real financial advice, and if you want to invest, please consult yourself or your financial advisor and take it from there. That's our safe harbor statement. But be sure to like and subscribe on all of your podcast channels. You can subscribe to Gordo's recently opened OnlyFans channel.
It's called Only Dude. You mentioned it earlier. You plugged it.
But yeah, that's kind of the background, and we can jump right into the topic du jour today, which is Datadog. Just your kind of, your average top tier public observability company that continues to go up and to the right and redefine kind of enterprise software. That's kind of a little lead into where my head is at early on.
Sounds like I have my work cut out for me as George the Bear today.
Well, I'm standing here with my pants off. Let me jump in there, if you don't mind. As usual, with great tact.
With great tact.
With great tact, Datadog. All right, let's talk about Datadog. It's a Data-Doggy-Dog world. Doing it Data-Doggy-Style.
Feels like a play on Snoop. I'm just saying.
There you go. See, you got the Gen X, reference. I appreciate that. You guys can still see that, right?
Hey, Snoop is still relevant. You can't.
He's actually been.
Snoop.
He's one of those brands that has hung around. He's hanging out with, him and Martha Stewart. You never would have thought they would have become kind of a thing. Anyway, but yeah, you get the reference. I'm also referring to doggy style sex.
I did not get that.
So, I'm a huge fan. Done it several times. For some quick stats, these guys are not small. 47 billion in cap, but that's quite a multiple, as we'll see. 3.2 billion in revenue for 2025 is the estimate. 1 year stock performance looked like it's up around 30%. 20%. So anyway, it's in the 20, 30. I can't quite read that. I'll look in a second. But over the 5 years, it's up like 250%. So it's done well.
You're getting old man. It's 20%.
Okay, I can't read that.
Round up to 21.
I need some glasses. So yeah, so the stock's come in a fair amount. I mean, from its highs of like 170, just in December, all the way down to 140. So nice little dip. You know what they say: buy the dip and hodl, right? So anyway, I think it's also just kind of really quick. I don't, we always talk about this at the end. I kind of just throw this up there up front. It's not a cheap stock. It's at 15 times sales on next 12 months of revenue. The average is about 10.5 times. Medians, 10.5, 11 times. So it's about a 46% premium. However, I would note their growth is expected to be 25%, and that's, about 43% above the mean of 18%. So, hey, right in line. You pay for what you get what you pay for. So, I just want to. So let's talk about what is. Yeah, once again, I can't help myself. Datadog is raw dogging the observability market. And I'm going to use that term very broad. There's some verities. There's stuff like security and like DevOps monitoring and digital experience management, but like a big chunk in there is what's called application performance monitoring. And so you're running an application in usually the public cloud. I mean, it is a hybrid company. Like they can do it, for on-premise stuff too. But they have a lot of their growth tied to cloud. So, anytime you're running an application in the cloud, if you want to have visibility into like how your customers are doing, or how the performance of the application is doing with those customers, and trying to troubleshoot, or just improve performance in general, you do that with all these traces, logs, and metrics, and these guys give you like a really nice dashboard. And so, if you're running, this is a dream, right? It's a must-have for someone that's running a bunch of infrastructure either in the public cloud or on-prem. And every enterprise has a lot of applications, and so ultimately they're leveraged play on cloud growth. Like the aggregate cloud spends like 20% growth. They've been growing around 25. there's part of the way these guys are growing faster, and there's a lot of opportunities. They're really good at cross-selling products. They have 22 modules, integrate with 650.
Woo doggy.
And so, like, you
Sorry.
can see a little chart I threw in there that showed you that, like, they've got a lot of room. Like, most customers are buying more than 2 products, but, like, only 12% are buying 8 plus, and, that's up from 4% a year ago. Sorry, up 4 points from 8% a year ago. So they can really just keep cross-selling. And, these guys are kind of, like, running the table. Like, there's 3 companies, Datadog, Dynatrace, and New Relic, that are, gaining share, but are still only 12% of a $50 billion TAM. We're going to say they're all kind of gaining share broadly over the last, if you look at an aggregate, like, a couple, maybe like 20, 40 basis points a year per Gartner. And so there's a ton of room for that. And basically, this is just a very complex, large moat business. It's getting harder. And so, like, there's actually a lot of AI that's being used already. It's not generative AI like you would think with ChatGPT, but it's like, I guess they call causal AI. And this is not something I'm super familiar with, but basically it's, it's like it sounds, like figuring out cause and effect, like trying to figure out what's causing a problem. And there's a lot of compute cycles and learning that creates kind of a moat and favors the kind of larger folks that are winning, and they should probably win more over time. I think it's also interesting that these guys are spending a lot of R&D, significantly more. Datadog is spending $600 million versus only $200 million at Dynatrace and $250 million at New Relic. This is actually like a year-old data, but still, it's these guys are just massively investing. And so I just look at this and go, okay, well, they're levered to the cloud. You have more public cloud adoption. We're not done with that. The more applications that spin up in the cloud, the more you need this stuff, the more complexity there is. And, AI and the investment required to kind of keep up is just allowing these guys to kind of pull away. So, for me, like, I just look at this and go, yeah, it's an expensive stock at 15 times, but, they're a premium player in the space and that, has really good growth prospects. And it's just not, if you account for the growth, it's not nose-bleedingly expensive. And so, my experience has been, stocks that are expensive and are winning, like, you want to own those. And it's just, I've always been afraid to buy the expensive ones and cry at a sore loser. And so, this doesn't seem like something that's going to be disrupted by, one of the Mag 7. It's a pretty, it's a corner of the world that's highly specialized that, they can kind of knock down their competitors. So, that's my bull pitch. I'll pause there.
What do you think? Like in terms of AI, you mentioned that they have some causal AI, that they've developed for their platform. Do you think, like, in the longer term, it's more of a tailwind or a headwind for their product platform in terms of, like, the competitive nature of it? Maybe it evens the playing field. Maybe it makes it easier for Dynatrace or New Relic or Splunk or.
And I would argue Dynatrace has kind of made the pitch that they are the leader in AI. I think they have kind of been pitching AI for the longest from what I've seen in this market.
I think they've gotten credit for it. I think they're playing catch up. Like, they got dinged in the Magic Quadrant, because the perception is that Dynatrace is not is sort of beating them on kind of the best of breed on this piece. But like, they're investing an absolute shitload, and they kind of win. Where they win is they're really broad. And that favors them as well. So you just have, companies more and more, they don't want to deal with a whole bunch of different vendors for different things. And so, we've seen this with many companies, including like Cisco, right? Like, it's just like, the one-stop shop. People take a lot of stuff that may not even be that great. I don't think that's the case. These guys produce great stuff, and they're super innovative. They get high marks for innovation and breadth. So, yeah, great. I think they're playing catch-up, but I think that given how much they invest and the focus on it, I suspect that they have this product called Watchdog, I think, that leverages this capability that gets decent marks. But yeah, if you're going to poke holes at them, little Dynatrace has got a reputation for kind of winning that piece. But I think, broadly speaking, that the folks that are the 3 of them are going to win this long term, because you just have to have the scale and an investment, and you just have the technical talent and the market experience. Like, they're just going to, I think, continue to run farther and farther ahead of all the. This is a very fragmented market. I mean, these 3 guys together are 12%, right? So it's pretty light.
Who owns that other percentage of the market? I feel like you've left some folks off here.
Well, I mean, yeah, they're all smaller. Like they said, the top 5.
Are they?
I think actually maybe the top 5 vendors.
Like, there's like a bunch. There's like Splunk, probably we consider, or App Dynamics.
I wouldn't call Splunk small. Splunk and App Dynamics are now under the same roof, right, at Cisco.
Yeah, that's right. I mean, I think there's kind of like a next generation of competitors as well. Like there's private companies like Grafana and Chronosphere, that are building
that are more
kinda-
open source type. Yeah, Prometheus, right?
right, that are building like more kind of like SRE open source type observability solutions in this market. Um,
Sumo
like
Logic,
The-
Logic
the-
Monitor.
Yeah, the ones though that you're missing here
SolarWinds
are
app,
that I'll
these
talk
are
about a
bunch.
little bit. SolarWinds, yeah, but what about like AWS has an offering here, as does Microsoft, right? So if you're already using the public cloud, they already lump it in with their offering. Why do you need to go to a Datadog when basically they give it away and they have a free tier? Like you can jump on that free tier, you start using it. Datadog doesn't have a free tier, so I suspect they don't get broken out, but
It's because
like
they're
end of
much
the day,
better, right? Like there's a reason why
well-
these guys, it can't not work, right? It has to be incredibly good.
No, the issue is most enterprises are using multiple clouds. And so if you're using Amazon's native cloud solution, observability solution, or Azure's or GCP's, like you can't, cross correlate between the different clouds you're using.
Azure will work in multiple clouds. AWS does not.
They typically don't work nearly as well as the like native solutions or the third-party best-of-breed solutions. Like I've yet to ever seen or hear of an enterprise that's using Azure on their AWS cloud or Azure on their GCP cloud. Like maybe it does happen in the corner cases, but like it's certainly not the best. Like their view is like they're able to sell you like a platform solution that's not best of breed at anything, but will like maybe like get to the borders of what you need done. Whereas like a Datadog or maybe a Dynatrace, but certainly like a Splunk or AppDynamics, they have like the best of breed in the market and they can cross correlate between all of your clouds. So it just depends on what you're optimizing for. But I think like in the enterprise, like the Fortune 5000, they often need the best of breed, and it's not good enough for them to just take like a platform solution from Microsoft who will claim. Although I have not heard anybody use that in a different cloud.
What I mean, this is just an honest question. I don't know the answer. I don't know if there is an answer that you can point to statistics for, but like how many organizations truly use multi-cloud? Like I know most organizations. I can think of the organizations that I've been a part of, maybe the last 3. There was usually one primary cloud. Maybe you acquired something, you rolled something in, you got a couple other things, but they were usually small on the edges, and you were primarily one cloud user. And so I honestly don't know the answer to that. Like, how many people are like, yeah, we're G Cloud and AWS, or we're Azure and, Oracle Cloud. Like,
Yeah, but the thing is, like, their environments are super heterogeneous. Like, even if you're just using AWS, you're also using, like, your own private cloud. You could be like co-loing it somewhere else. You could be also using like a bunch of different forms, whether it's like Kubernetes or running it on bare metal. Like the environments that they're working with, though, plus like as you mentioned, they usually have a couple of applications, if not more, running in some different cloud. Like maybe they're running in Oracle's cloud or something else. So like these environments though are never like homogeneous. Like you need a solution that integrates with everything and can effectively give you observability over the entire topology of your network. Like it's very rare, I would say, that like somebody is running everything in one cloud in one format, and you can use one solution to solve all of those things, like one solution from a native cloud provider.
you're probably a small company if you are.
In conclusion, there's a strong reason to have best-of-breed guys like Datadog, AWS, and other cloud guys suck. So I can't imagine what possible bear case a person could make about this stock. And I'm sure some stupid shit about valuation, which makes no sense given that they're growing at a premium. They're growing at a premium rate. So I can't. We could probably skip. Really, probably end the pod right now. The bear case probably is. I think people probably don't even want to hear it. So
No, so it's just a buy.
I think. Well, I think the thing, like the one data point that I think that sticks out to me the most about Datadog, just in given their historical track record, is I think they had like 25 quarters or something insane where they were doing like over 130% net dollar retention, which is just like an insane metric at scale. And it just goes to show like how strong their offering is in the market with their enterprise customer base. Like this is like a massive data set. They have like over 25,000 customers. The fact that they're being like that 60% of their revenue is coming from their current customer base is just a testament to the fact that like you can't solve this by going a cheaper way. Like this is a solution that has like mass market appeal within the enterprise, and they've been able to do that repeatedly over like several years, if not, I mean, decades, really, a decade and a half, really, at this point.
Yeah. Though, what's their net retention today?
I think it's like 113.
I think I saw 110, but yeah, in that range. So
but even 110 in today's market, like post-pandemic, is still like elite net dollar retention. I mean,
like
like
$2.5 billion in sales. Like
functionally elite. Yeah, functionally elite might be like 113%, but they're pretty close to like being one of the best companies in enterprise software, like by metrics alone. Like sort of putting aside what they actually do.
With 22 modules, I'd hope they could do a little cross-sell, but I do think the R&D here is an interesting stat, too. Like, I'll take off my bear hat for 1 second. Like, it is interesting seeing, as a percentage of revenue and a just, like, absolute dollar amount. Like, Datadog spent over $600 million in the last 12 months, which is 30% of revenue.
I think it was
And
actually
that dwarfs.
22. Yeah, but because it's from a BMO. Early 24, I think, report. So
they can't calculate.
I just have
oh, you mean updated?
Yeah.
Okay, so this is a little dated. So this is calendar year 20. Okay, so calendar year 23, or through September 23. So they did last 12 months. But yeah, I mean, just in that time period, Datadog did over 600 million. Dynatrace did 197 million. So like a third of what they spent. New Relic was at 215 million. So, I mean, they're kind of dwarfing like the independent players here and what they're spending, which is probably why they have 22 modules and 650 integrations, as you note in your slide here. All right. Anything else you want to add, Gordo, before I start, beating you down? And I feel like Bruce has kind of joined your team here as the host. He's supposed to be this neutral party, but
I am neutral. He presented the bull case, so I was asking some questions and poking some holes and trying to see where it led.
It didn't seem like many holes were being poked there. I felt like
it was just rock solid. It was so well delivered. All right, well then I will pass the conch to George. Yeah, Lord of the Flies here.
I mean, the last time I read it.
Yeah, the book.
That must make you like 70?
I read it every day before I add to my manifesto.
All right, I think you gotta stop sharing.
With the bull wrapped up, let's turn it over to George the Bear, GTB, to see what he has to say on the other side of the ball.
Can you guys see my presentation?
Yes.
3 good-looking guys, especially that guy in the middle. My goodness.
I think the guy.
I don't know what it is about him.
With
the money coming out of his pocket. That is my favorite part of the whole thing. Is it's like we all have like the pocket squares or whatever in our jackets, and then you just have money like coming out of your jacket. That's what I always see.
Hey man, there's nothing better than money.
All right, I entitled mine "You Dirty Dog," and I've got a picture of I don't know, what is that? What kind of dog is that? It's a like black Labradoodle or something, and he's just like sitting in a puddle of mud. Like he couldn't be happier. He's like covered in mud. Like man, that is living large. That's probably actually he's happier than all of us. But anyways, all right, I have 3 points to make on my thesis here. So bearish thesis number 1. Drum roll, please. Customer growth is slowing. If you look at their total customer growth, like this is, net retention is always nice, but I always go back to like, is the inbound engine that's adding new customers working? Like end of the day, that has to be healthy if you're going to continue this down the road. At some point your customers expand, all they're going to expand. They add as much data as they can add. They add as many licenses, seats, etc. But are you able to attract new customers? And this was a dream. Like through 2020 through 2022, this company added between 3,600 to 4,600 customers a year. That was a 35 to 23% growth rate, kind of ticking down. So it went in 2020, it was 35%. Probably pulled forward some COVID demand there. but 2021 was just as strong, almost at 32% off a bigger base. Then 2022, you started to see the slowdown, like a lot of the SaaS market, at 23%. And then 2023, they went all the way down to 18%. Now, they're 3 quarters through the year, so I did a little extrapolation here of where they're sitting today. And that, like if they do a similar quarter to what they did in the third quarter, and fourth quarter is probably a little bit stronger, they'll probably end the year right now, if they do exactly the same as they did in the third quarter, they'll end at 16% year-over-year growth. Now, this is not the same as what they were doing before, even on an absolute basis. If you say, okay, well, great, law of large numbers, they're adding more and more customers, of course the growth rate comes down. They're still not adding what they added back in 2021 or 2022. They are slowing on the new customer front. And so if you say, hey, this is a company that you have to believe at this valuation has a long runway, they should be adding more and more new customers. Like that should be accelerating, even if the growth rate isn't. But they're not. And so that's a problem.
But
the other thing,
like, just one question on that. Sorry to interrupt you. But like in terms of like the net new customer numbers, like part of those numbers are a little bit skewed, not only by like the quantum in 2020 and 2019, but also by the pandemic, right? Like there's certainly an impact that the pandemic had in terms of the growth of their customer base in those years specifically.
Yeah, but I mean, I think most companies have seen a rebound back to kind of steady state at this point to some degree. But like, yeah, you pulled forward some. But is a best-in-class company adding 16% new customers? Is that like get me up and excited? And then the thing, if you look at 2023, like they did a acquisition that year that added, and I haven't been able to verify this, but BMO Research said, 1,400 customers. You back that out, like that growth rate was only 12% that year. Like they really hit, they slammed something broke in their new customer acquisition model that's not there, and that's to me is like a red flag of being concerning. So I agree, like the whole market is slowed. But at the end of the day, like if you're a company at a premium valuation, like you should not be demonstrating this kind of slowdown. So the trend continues to be concerning here in that it's lessening. You're already in the mid-teens, so what comes next? Like, are you going to be in single digits in the next couple of years? That's what the trend would say. So like you're betting, if you're buying the stock, you're buying at a premium valuation, and you're betting that trend's going to turn around and accelerate versus continue on the path it's been.
Do you think that NRRs are going to be the same a year from now in software broadly?
Maybe. Well, let's talk about NRR. So like we talked about like, customers using multiple products. So I have a chart down here. They provide this in their investor deck. So
super bullish
you showed
to me. It's going up into the right. More and more products. It looks. Why would you?
So it's growing. So let me bring you into calculus. So the second derivative is like, what is it, accelerating or decelerating? And so here, like I'm asking myself, okay, well, is that continuing to increase at a faster rate or is it slowing down? And the answer is it's slowing down. So they are growing the number of products and customers, but like there's not a trend here that's changing. In fact, it continues to slow. So if I look at like 2022, let's just pick 4 customers using 4 products. Q1 of 2022, they had 35% of their customers using 4 products. By the end of that year, they were at 42%. So that was 7% growth that year, right, of their customer base. So what happens in 2023? Okay, so they go from 42 at the end of 22 to Q7, 47. So 5% growth. Okay, well, that's all right. Where are they today, 3 quarters into 2024? 49, so 2% growth. It's slowing down. That expansion is not showing any signs. In fact, it's getting worse. And you see this across all the categories of, customers using 6 products, 8 products. That second derivative is getting slower and slower. So the only thing that's positive in their customer base that I can see is, like, you look at customers, they're trying to go more up market. They have customers who spend more than $100,000. That drives the vast majority of their revenue. I think call it roughly 85% of their revenue. In 2020 they were growing this at 47%. 2021 they did a fantastic job, 64%, even though their overall customer growth went down. 2022 still strong at 38%, and then 2023 they hit that wall at 15%. So that was more than cut in half. 2024 it looks like there's a little bit of recovery there. So like if again I kind of what's that?
So they're
It's a possible inflection. Yeah, it's a possible. They have to finish the fourth quarter. I took the third quarter and I basically plugged in for the fourth quarter and said they did the same thing they did last quarter. What that look like? That lands them at 20%. Still not like of the heydays. On an absolute basis, that would be 630 new customers. Like 2021, 2022, they were doing 780, 770. Like they should be able to match those numbers of their best year, especially 2022. 2022 was a horrible year in the market. They added 770 new customers that were over 100,000. They are not probably going to hit that this year. Like I'm projecting them at 630 through 3 quarters. So like end of the day, something is not working here in their new customer acquisition model, and that's something that's going to show up, in the future here, because like they need to keep this thing going in order to really justify this premium valuation.
Those are like peak COVID years where kind of like
2022 was not a peak COVID year. That was a horrible year in the market. They can't even match those numbers.
A horrible year in the market, but not a horrible year.
No, it was a horrible year in the market because also like companies underperformed. Like everybody was like cut and spend. The Fed was jacking rates. Everybody got cautious. So like these guys, like end of the day, like they haven't been able to even live up to the like that bad year, that macro environment. And now we're at a much more like benign environment, and we're still like they can't hit those numbers. Absolutely.
It really looks like cost came out of the cycle in 2023. Like that's when companies were able to pull the cost out. Like it doesn't look like in 2022, and certainly not in 2021. That companies were fast enough to pull cost out of the system, and now it feels like cost is coming back into the system, and they're like primary beneficiaries from that, right?
Are they? I don't know. I don't see it in their expansion. I don't see it in their new customer adds. A little bit in the large customers, so maybe the large customers are starting to come back a little bit, but like I'm not convinced this trend has turned.
But it grew 26%, right? So like underlying, despite your like very bearish discussion about these things kind of topping out, the growth looks great. They're going up market on, with these 100K customers are growing, they're adding more this year than last year. Like their NRR is still at, giving them 10 points of growth if you're just doing nothing. So like
that's great if it's a cheap stock, but it's not a cheap stock. You're paying one of the highest market multiples.
But you're not. But you're not paying for net new customer growth or net new 100K customer growth, even though it looks like they are reinflecting here on the net new 100K customer growth. With which, if next year they do the same thing and the trend line continues, they could be well over their best year ever. You're paying for like effectively, like growth plus in this company's case, free cash flow, and like they're basically a rule of 50, rule of 55 company. And there's very few companies in like the broader market writ large that are growing this fast with this level of efficiency. So like you can kind of parse it under the surface, or you could take it for what like the core metrics would suggest, which is like this is a premium company that's getting a premium valuation because they're doing things better than most every other company in the market.
I'm just saying, if I'm going to pay a premium,
I love Bruce right now.
You guys are tag teaming me. This is unfair. I was just going to say, like, if you're going to pay a premium, like, I would want to see these metrics healthy. Like to me, if I looked at just these charts, I would say this company's gotten dinged. It should be at a discount. Great. I will make a bet at the discounted valuation from what it's been at historically that it's going to be able to recover, but you're not getting that. You're having to pay the premium price, the top multiple, and believe that turnaround is coming. And that's a risk I don't think you're getting compensated
turnaround,
for.
You mean like, I don't know, I don't say you mean turnaround. Like, people are imputing like 25% growth, and they've been doing that. So like, and doing it, they're not that big. Like it's still a big TAM. They're 3.5. I think their estimates are for like 3 and change. 3 billion and change. So like there's just a ton of room for these guys to grow. So I feel like the idea they're just going to top out here, it just seems the market itself is supposed to grow like 10 points. So I just feel like there's just a lot of reason to believe these guys are going to achieve that 26% growth, and I think that's going to be good enough because that's still higher than everyone else by 40% on average. So
yeah, I mean, I think at some point they're going to get they will get growth from existing customers, but like my concern is if this number continues, like their number of customer ads continues to go down and dips down into the single digits, like they're not going to be able to continue that kind of growth in the future years. And so this is
The
more.
customers are massive. They're 100K plus customers, and I don't know what their average is. That's one thing I don't know. But
It's 85% of their revenue. So, like, yeah, I mean, the 100K plus customers are very important. So, yeah, I think if they can land this year at 20% and they can show continued acceleration there, I'd become more bullish. I'm not. Let's see how the fourth quarter comes in, but I'm not convinced that's done. Like, that has fallen off. That metric in 2023 was the one that was most hit. Like, from 47%, 64%, 38% down to 15%. And now it's like, oh, they got back to 20, yay! And they're still not even, like, the absolute number of those 100K customers they're adding is still much lower than they were doing before. So, like, they haven't fully recovered. Like, even if you told me it's a lower percentage, fine, but tell me the absolute number of customers you're adding is still growing, because you're adding salespeople. You're continuing to expand that motion. So, like, end of the day, like, something's not working as well as it used to. And that, to me, is a little bit of a red flag. Like, I don't want those red flags in my premium valuation companies that I'm buying. That's my point. But
or your
let's keep going.
girlfriends, or your mistresses, right? The red flags.
Or my mistresses, exactly. So if I'm buying them, those... Bearish thesis number 2: competition is rising and the dog does not stand out. So this dirty dog, he's been rolling in the mud and he's sitting in the pound and he's hoping like someone takes him home. He doesn't stand out. So if you go through all the reviews, so I looked at like yeah, he's not the mate of choice here. He's If I read Gartner peer reviews, and I listed a number of players here. So Datadog had 770 ratings at 4.4. I go over to Dynatrace. They have double the ratings, 1485 out of 4.6. So they're higher. New Relic, 4.5. Again, almost double the ratings.
These are
Splunk,
bullshit.
4.5, 991 ratings. Oh, the Microsoft Azure Monitor, not as many ratings, 331, but 4.5, all higher. AWS, 4.5. There's several others. People did not like Datadog. And so, like, it's not horrible ratings, but, like, they're being rated below their competition. So, like, to me, like, if this is a market leader that should be, like, slamming everybody, why are they not rated better? And, like, my concern is, like, again, like, Microsoft and Amazon, overall, like, you're using their clouds. They already have solutions there. They bundle it free. Like, they start you out with a free tier, and it's like, hey, use our solution. So it's like Azure Monitor, Amazon CloudWatch. It's right there. You try it out. It's good enough. You use it. Boom. Like, you're off to the races. So I think it's very hard for somebody to, like, really say, like, those are going to continue to improve. They're going to continue to invest in them. Like, why make the effort to go, like, implement Datadog? And one of the things that people complain about these platforms is they're hard to implement. So if you're already in the cloud, like Amazon, Microsoft are going to make that so easy to use. You don't need to go to Datadog. So I think the competition, like, you have these huge players with huge budgets that want to win the cloud. Like, they're going to make these solutions better and better, and the need for Datadog gets less and less.
But don't you think, like, this sort of, like, misrepresents the appetite in the market for these players? Like, if you look at just like ultimately the value of the solution is sort of in some ways reflected in the market cap of the company, and Datadog's market cap dwarfs all of these companies. I mean, you can't really break out Microsoft or Amazon, but, like, Datadog's a $47 billion company.
Splunk was, how big was Splunk before it got taken out?
$28 billion company. New Relic had acquired for $6.5. Dynatrace is a $15 billion company. Like, there are far more customers.
Yeah, because Datadog's overvalued. That's the problem.
No, it's almost like the enterprise has spoken. Like, you can look at, like, Gartner peer reviews or G2 Crowd or some of these other, like, user-generated content sites, but, like, ultimately it shows up in revenue. And, like, Datadog's revenue is far, far bigger and growing far, far faster than any of their peers.
So here's why, like, okay, so I included from G2 Crowd. They do a nice job breaking out the cons. Like, why do people not like Datadog? And the main thing, it comes up twice: expensive and cost. And so I think there are people that take it. It's probably a better solution. End of the day, like, then they get stuck on it and they spend too much. And this is why, like, end of the day, the new customer growth is stalling. You have people that are stuck on it. They're going to continue to use it. It's hard to switch over. There's switching costs, but like it's expensive to go deploy. Like they charge you the more you use it, they charge you. You know, the more data you ingest to observe, they charge you, and it gets extremely expensive.
Yeah, but customers are willing to pay that. Like, you know, like gross dollar retention
they?
is not an issue for this company. Like net dollar retention is close to being like elite. Like it just like it isn't something. It is expensive, but it isn't something that people are churning from in a way that's really impacting their core business. And it would show up. Like a lot of these sites in some ways are like, this is like,
yeah, I don't think they're churning, but if you're a
evidence.
new customer, you're hesitant to get on it when you read this and you see this. You're like, hey, people aren't happy. New customer growth is going away as we just saw. So like people are saying, hey, yeah, Datadog sounds great, and then they give it to you after you get in the door. So like if you don't want to be taken advantage of, go use one of these platforms. Go use one of the private companies that's open source. Like those are going to be cheaper. There are other options here.
I think it's just clear from their financials that people do want to be taken advantage of if they're being taken advantage of by Datadog.
Being raw dog.
That's not what their new customers say. All right, bearish thesis number 3: premium valuation. So for slowing metrics and bad reviews, you have to pay a huge premium valuation. So to me, like, yeah, I think you look at them, and the one thing that I'll say, like, I think Bruce, you mentioned it, is like they are. I will give them credit. They are very efficient company. So like if you take the rule of 40, and again, I like to do rule of 40 where you weight the growth twice as much as kind of the profitability margin. And that tends to be, at least currently, how the market looks at these things and has more historically, is growth is usually weighted more than profitability. They are best of breed. They're kind of up there. So if I look across the companies in this comp set that I've included, you have Snowflake, Dynatrace, CrowdStrike, Elastic, Atlassian, Cisco, SolarWinds, ServiceNow, Palo Alto, HubSpot, Mongo, and Zscaler. There's only 2 companies that really best them on that metrics. You have ServiceNow at 54%, and you have CrowdStrike at 54%. These guys are at 51%. So I will say, like, best of breed. What worries me is kind of those leading edge metrics of like customer acquisition. You're going to pay a premium for it. Like, I want to see those at least staying steady, if not like accelerating. If I'm going to pay 15 times, for revenue, or 55 times forward EBITDA, which is just mind blowing to me. So 55 times basically your cash flow. One thing I will leave with here, that like how I like to think about companies is, I look at last 12 months of revenue here, or next 12 months, right? Next 12 months of revenue is 3.1 million, call it. 3.1 billion, sorry. Not million, with my
$1 million.
And then I say, okay, at a steady state, like these tech companies, like they grow and they get these huge multiples, but like end of the day, once they kind of go to like growing at like GDP rates, like a Cisco or other mature tech companies, and Cisco's not a perfect example because they're more hardware, but a lot of them, they kind of settle in that, like, call it like 4 times revenue range, for kind of like high margin company. And so I say, okay, like at this, like what revenue do they have to get to justify that valuation at maturity? So like Datadog has an enterprise value of 45 million. So like basically like they have to get between like 10 and 11 billion in revenue to be able to do that. And that's basically what you're betting on. And upside is going to come above and beyond that. And so do you believe this is a company in observability, right? How big did you say the market was, Gordo?
50 billion.
Well, that's with all their other modules, which I don't always believe they're going to capture. But what's the observability? It was like in the 20s, right?
This is 24 billion.
24 billion. So they're going to capture almost 50% market share, basically, to be able to justify this valuation. And that, to me, feels like a big bet, right? Very few companies get 50% market share.
Numbers, right? Like, nobody's expecting them in 2026. I mean, they think,
No, it's several years out. But I'm just saying, like, there's two ways to look at this. It's like I hold and I never sell it, right? And so there's this company, like, if I was the owner of this business, like it was a private company, it was my company, would I want to own it, right? And I had to pay this price for it. You'd have to sit there and think, like, is there upside to that, like beyond that revenue number? Can I get there and justify the price I'm paying? There's also the trade of like, what are they going to do near term? What's market perception? Like, can they accelerate? People will probably pay more for this thing. So I'm just trying to give a perspective of that later one of like, hey, if I was the owner of this business, do I really believe it can get there? And I think that's challenging given those metrics. Like you're saying, I'm going to grab, call it, 45% market share of observability. Good luck. So, at the end of the day, like not like perfect enough for me to pay that premium valuation, and therefore that's why I'm the bear.
I feel like I've heard this negative pitch from you before. I feel like you did a cut and paste on a prior presentation, but thanks for mailing it in. Well, it's pretty clear, how half-hearted that was. So,
This seems like a Trump argument where you don't actually have merit, so you just insult the person instead of actually like trying to tear down their argument.
It worked pretty well for him, though.
Put your hands up.
I didn't. I know my teeny little hand. Sorry.
All right, so should we go around the horn and talk about our actual views?
Yeah, sure.
I think I know everybody's, but Gordo, why don't we start with you?
I mean, strangely, I am on the side of that I pitched. Like, I mean, I still feel like these guys are, but it's a best of breed player. They're expensive, but I don't think they're outrageously expensive for, for their growth opportunities and their track record. And just, I do believe that they can consolidate market share. I mean, they have been already, and I like the consumption model. I feel like, certainly if the software valuations broadly uptick, these guys are going to feel it. Their stock's going to see it. And I think if there's a acceleration in spend, I mean, they seem to be one of the players that's not. I do worry there's a lot of software players that are kind of get, disintermediated, or they're just not going to make that budget line item, in the coming years, the way that Salesforce does, right? Like, and Gen AI is going to take a huge chunk out of budgets, and so they're not going to be one of the items that gets cut. You have to be able to have visibility into your applications, and they actually have LLM visibility products, so they do have some ties into AI, into Gen AI. A lot of that's on the come, but ultimately I'm going to bet on these guys. So yes, I am really, truly a bull on Datadog.
That's interesting for you, as you're usually such a value investor. So I'm surprised that you're willing to pay the premium here.
I just know a good stock when I see it.
There it is. George, what's your actual view?
So, as I was thinking about this one, I mean, I don't hate it. I mean, I think the reason their ratings are as low as they are, so kind of to my point of like customer competition, and I think because they do charge a premium, they are expensive, but people do pony up for them. I do think Amazon, and Azure, Microsoft, launching this. I think Google has a more nascent offering here. Is not great for them, but I think there are other they're focused on this. Like they're going to be best of breed. Like I think those offerings have been out there for a long time, so I'm less concerned that like end of the day they won't be able to perform. I do think the point, around like you're paying a very premium valuation for something that hasn't been performing in the way like I would expect my premium company to perform, is true. Like I think they're a high beta name. I think if the risk appetite comes on, they'll do well and they'll outperform. If the market goes down, they're really going to get hammered. And then the day I thought to myself, like, is this a stock that can double? Can I believe this is going to be worth $90 billion? And like, how do I come to that? Like, I have a hard time making that argument. And so like, maybe they'll go up, but I don't think they're going to outperform the market. And so therefore, like, I would rather like short them and put my money elsewhere. So I'm actually a actual bear on this one.
Wow. I'm a little shook. I thought you were a paper tiger on that one. Okay. Or
I mean, I'm not a strong sell, right? Like I said, I would not be shocked if it goes up. Yeah. I just don't think it's going to vastly outperform the market, and so I'd rather put my money in other ideas.
I hear you like on the risk reward piece. Like I do think like this is going to be a fairly high beta name, just like based on their like expectations and where they sit in the market today. I will say, like, I am a bull on this stock.
It was hard to tell.
If it wasn't obvious. I think that there's a lot of tailwinds around this name. They're a premium name in the market. I think just the tailwinds around AI are going to be like extremely helpful for the company's core operating business. Like, I think
That's fair.
Compute will come online far quicker. Like, I think infrastructure environments will get far more complicated. I think applications will get spun up far more quickly. And I think if there's, one kind of type of company that's at the intersection of all those, it's observability companies, it's SRE companies, it's, the security nexus at those companies. And so I think Datadog is well positioned, 15 years later to take advantage of those massive trends. And I think they've been super forward thinking about it. Like you guys had mentioned in terms of like the amount of R&D dollars that they put to work. They aren't the type of company that I think will be disrupted. Like they want to be the disruptor, and they've, stayed hungry around those core principles, I think, really since inception. In terms of like the core operating business, like I said, like this is like a rule of 50, rule of 55 company. I mean, it's like you very rarely see companies.
They're very efficient. They spend very little on sales and marketing, which is impressive that is the other counter, right, to my customer argument is like, yeah, they're not spending on it. Like they're disciplined and, like they're getting high quality.
And even contrary to the GT or Gartner reviews, I mean, I think customers like obviously really do like their products, even though, they haven't maybe like come online as quickly as they had during the pandemic or potentially before on a lower revenue base. Like they continue to spend, like their NDR numbers are very good. I think it is like, one of those companies where I agree with what you're saying. Like you do have to get to like $10 billion in theory to get to a $100 billion valuation. I just don't think that's the reality of like the market that we see. Like, for example, CrowdStrike is basically doing $3.5 to $4 billion, and they're effectively like an $85 to $100 billion company.
Yeah, but that's a growing company. Like, what about the companies that are mature? So, like, look at like a Zoom, look at like Cisco, look at like a Box, right? Like those companies.
Think this company looks far more like a CrowdStrike than a Cisco. You know what I mean? And I think there's a real.
They eventually slow
case.
down. Some point they saturate, and so the question is,
like
when
CrowdStrike will slow down at some point and look like a Cisco too. Like I think that there's like a real business case to this company doing $4 to $5 billion in the very near future, and I think there's a case or a valuation that approximates kind of $80 to $100 billion potentially as well, because the market's willing to pay a premium for a company that has these types of metrics, similar to the way they do with CrowdStrike, effectively. So, I think it is one of those things. Like over time, over the next 10 years, maybe they start to growth really starts to come in, and that impacts their multiple. But like in the intermediate or the nearer term, I do think that there is a potential glide path here for the company to get to the high 80s, low 80s, high 80s, close to $100 billion valuation. Just given the fact that the market is looking for the best companies and willing to pay a premium for them. So I like it. I'm a bull. I think like they have a lot of tailwinds, both in terms of their product and in terms of the where they sit from a market standpoint. And so, I would be buying it at this level and holding for at least the intermediate term.
The last. I mean, I do like your point on like there's a lot of investment going into compute right now around AI, and so like that is something I thought about as I was making my determination here. But like end of the day, I would have liked to have seen them see some of that already because it's been happening. But maybe it's maybe it'll come on later. A lot of it right now is not really maybe ready for all the observability tools and all the tools they have to offer. So that is something to watch. Like if they start to benefit from that, I would get much more bullish. And again, those customer numbers, if that new customer engine starts to pick up, like I'd get much more bullish. But right now it just feels like you're already paying for a lot of execution that's on the come versus like guaranteed.
Well, there you have it, guys. Like we always say at this time, I go for mine.
All right, Kanye.
Yeah. All right. Like we always say, Bulls win.
Bulls
Bears
make money,
lose, I
Bears
guess.
Bears make money. Pigs get
Slaughtered.
Make
Oink,
money,
oink.
make money, money, money.
We out.
Money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need a Skrilla on the Rilla.